Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO's NIO stock and just how high the stock price could surge after their upcoming catalyst in the second half of 2023. In this video, we will be analyzing their latest news updates, approaching catalysts, and their latest price predictions from professionals. So for more videos just like this one, don't forget to go and annihilate that like button right now, comment your thoughts down below about just how high you think NIO's share price could actually go, subscribe if you are new, and without further ado, I say let's jump right into today's stories. NIO is a Chinese electric vehicle maker, and currently they're trading around $8.44 per share. Many analysts believe this company could actually fall as low as $6 over the next 12 months, while other more bullish analysts believe this company could surge up to $25, and we'll be talking about exactly which of these price predictions I personally gravitate toward. But right now, we want to go over some great news because NIO, which is a leading premium electric vehicle company located over in China, has recently announced that they entered into a share subscription agreement with CYVN Holdings L.L.C, and this essentially gives NIO $738.5 million worth of cash in exchange for around 84,695,543 newly issued Class A ordinary shares of the company at a per-share purchasing price of $8.72. So this is going to be pretty good for NIO, considering that this is a way for them to raise money and stay afloat until the company eventually becomes profitable. So we'll be discussing later whether or not this was a good move or a bad move. However, the official closing of the conditions of this transaction is expected to take place in early July of 2023. And upon the closing of this investment transaction, the investor, CYVN Holdings, will be entitled to nominate one director to the company's board of directors as long as the company continues to beneficially own no less than 5% of the company's outstanding share capital. The founder, chairman, and chief executive officer, or CEO of NIO, had to say this about the transaction, and I quote, "The strategic investments from CYVN Holdings demonstrate NIO's unique values in the smart electric vehicle industry. The investment transaction will further strengthen our balance sheet to power our continuous endeavors in accelerating business growth, driving technological innovations, and building long-term competitiveness." He goes on to say, "In addition, we are excited about the prospect of partnering with CYVN Holdings to expand our international business. With the vision of Blue Sky coming, we will continue to strive for technological breakthroughs and user experiences beyond expectations, contributing to a more substantial future for the globe." End quote. In response, the chairman and managing director of CYVN Holdings said this, "Our strategic investments in NIO are driven by our appreciation of its leading brand, innovative and premium products, and proven technological capabilities in the smart electric vehicle market." He went on to say, "We are excited to develop strategic partnerships with NIO and are fully committed to providing strategic value that will support NIO's international business growth. We will join hands with NIO to drive the global energy transition and sustainable growth for the whole humanity." End quote. So this is actually a very positive news update for NIO. However, it does come at somewhat of a cost. For instance, even though this $740 million worth of cash will be added to NIO's balance sheet, NIO will have to have a very strong balance sheet to survive until the company eventually becomes profitable. All in all, NIO does have billions of dollars on their balance sheet. However, with their current cash burn rate, they are only anticipated to survive over the next 3 years, meaning that the clock is ticking. NIO only has 3 years to become profitable, otherwise the company could completely go out of business if they do not secure further funding. Now, I don't actually think this is going to happen. Either A, they are going to secure further funding, or they're going to become profitable sooner than what was originally anticipated. And since we are already in 2023 and they are anticipated to become profitable by 2026, that means we actually have around a 6-month time period where NIO will become profitable before they run out of money, according to current forecasts. Also, I want to say an upcoming catalyst is we have now entered into the second half of the year, to where NIO is projected to improve their overall product lineup and hopefully be catapulted further toward profitability. They have a lot of great catalysts coming up toward the end of the year, and this will actually increase their overall revenues, which should lead to updated profitability estimates and even greater margins. For instance, NIO is mostly active in China, however, they do have a global presence. But considering that China is the world's most important electric vehicle market, NIO is in the heart of the largest EV market in the history of the world. NIO's total sales sales were around 44,000 during the first 5 months of the year, which represents a growth rate of around 16% compared to the prior year for the exact same period. While a mid-teens growth rate would be very nice for the majority of electric vehicle makers, considering NIO's current positioning and the pressure to become profitable before they go out of business, this is not enough to keep the business afloat. However, luckily, higher delivery growth during the second half of the year has been projected, and this is what I've been talking about for quite a while now. From now onwards, we're going to see a huge increase in the amount of demand and overall revenue NIO will start to bring in, and this is going to be due to several factors. For instance, NIO will be releasing their ET5 touring sedan, and NIO also has their recently launched all-new ES6 SUV. NIO already received around 30,000 pre-orders in just 3 days. That would equate to 10,000 vehicles per day in a pre-order, meaning that if they sold 44,000 during just 5 months of the year, and now demand has increased for 30,000 pre-orders in just 3 days, clearly NIO has hit a gold mine. That means this data suggests that the demand for NIO's new vehicles are extremely high and that Chinese consumers are willing to pay even a premium above average price for NIO vehicles, especially their new vehicles being their ET5 Touring and their ES6 SUV. On top of that, NIO's management even guided for deliveries around 10,000 just during the month of June, which would be substantially above their current pace over the last few months. NIO also claims that once June ends, they are anticipated to sell around 20,000 vehicles per month after June. And this would mean that they would be on track to sell around 175,000 vehicles this year in total. Even if NIO were to sell just 15,000 vehicles per month during the second half of 2023, that would represent a huge improvement overall for this company, which should fuel overall bullish positive investors. However, during the short term, at least up until the next earnings report, we actually want to wait until the fourth quarter earnings report, because the third quarter earnings report is when this company will actually originally start to scale, and then after that point onwards, this company then will take off like a rocket, which hopefully will increase their overall profitability projections. For me, I think it's going to be changed till sometime until 2025. And if that were true, this means that this recent development from receiving around $740 million worth of cash just to keep the company afloat, this then could be funneled into research and development to further the company's overall technological advantage over in China. On top of that, the company is also planning to increase their overall brand awareness globally. So as they continuously reach out across the world, this is going to benefit NIO shares and NIO shareholders even more. Now, we also have an upcoming catalyst on June 26th. And what exactly would that catalyst be? Well, apart from their overall increasing demand, improving margins, and the investment from CYVN Holdings, there is more positive sentiment funneling into NIO, and that is going to be their upcoming annual general meeting on June 26th, where we could receive very positive announcements that may arise out of that meeting. Analysts from Bank of America are growing increasingly positive and bullish on NIO's revenue and margin growth, specifically during quarter 3 and quarter 4 of 2023. In previous videos, I've already gone over how I am bullish on this company during the second half of this year onward. But until then, I would actually say to wait until we actually get quarter 3 results coming in, and then from that point, then determine whether or not you should make an investment. By jumping in now, you could be too early or investing prematurely into this company, because during that time, before we get quarter 3 results, the current share price could continue to trend downward. However, by the time quarter 4 comes around, especially if we had a very bullish positive quarter 3 result, the share price should eventually catch on and start trending upwards well into the $20 range according to some experts. Now for me, I would think this company is worth probably around $15 to $16 after quarter 4, but we're just going to have to wait and see. On top of NIO's upcoming earnings reports, I also want to go into detail just how beneficial their ET5 model will be. As new models continue to be rolled out, NIO, from seeing their success in the ET5, will continuously make new models, which should increase their overall top and bottom line margins. This stock could see some great fundamental support and surge higher over the coming quarters, so I would highly suggest that you pay attention to this company and you tune in on June 26th for that overall general meeting. From that point onwards, I would say that if you are a NIO shareholder, make sure you are not already overexposed to this company, and if you have yet to invest into NIO, feel free to wait until after quarter 3 so you can see the results for yourself on whether or not this company is truly scaling their overall demand and if they are keeping their promises by selling more electric vehicles past quarter 3. But until we get solid, solidified results, I would honestly just hold this company as long as you are not overexposed. Now, if you are overexposed, more than a 5% initial portfolio allocation, feel free to sell some of your shares or even hold on to them until quarter 4. But again, we want to practice proper risk management here by not overexposing ourselves to any singular risky growth company. With that being said, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now, especially if you made it all the way to the end of this video. Subscribe if you are new, and I will see you in the next YT video.